Hey traders, this is Jeff, your neighborhood option guru. Today we are going to talk about unbalanced butterflies, specifically unbalanced butterflies on weekly expiration options. And in this particular case we're going to cover Apple, which I have done 3 consecutive live weekly unbalanced butterflies on. And I just want to let you know what I've been doing and why I've been doing it and how I figure out what I'm going to do. First we'll start out with a chart of Apple, and as you can see I have a couple of lines drawn on here, but it looks a little crowded, doesn't it? Doesn't look like there's a lot of movement on the price, when in reality there is. It's just the scaling on the charts that's making it look like that. So one solution to that, of course, is to zoom in, and if you zoom in then you can see a little bit better what I'm talking about, and you can see price movement a little bit better. But let's move back out and I'll show you another thing that I do sometimes, and that's to go over here to the price scale on the right and just click and drag it, and you can compress it down more or you can spread it out more. So if you spread it out, you can actually get it to run off the scale of your chart. I go over here and select the finger, as I call it, or pan if you want to be more correct, and we can just like spread this out even more, and now you can see the price movement a little bit better. High price stocks are like this, and it all depends on how you have your chart set up as far as how much room you want above the highest candle and how much room you want below the lowest candle. And if you want to get it back to where it was, hopefully you also have saved styles, so I can go back here and say I'm just going to go back to my default with person's pivots, and it brings me back to where I was, and then I can redo this thing and change the scale again, grab my finger, drag it down, and now we're ready to talk about this stock. Let me just zoom in one click here. And now because I wanted to see the weekly expiration. So what I've done is I have a former resistance which has turned into support line drawn in here, which is a fairly strong one. And I have a weaker one, mainly because it's younger. I only have 2 data points on here. That was resistance where it broke out here, and I got a person pivot up arrow, and this was my trade last week, which I actually entered on Monday and got out on Tuesday, and that was a good one too. If you want to take a look at my in play and actually closed trades for the month, you can see that on the blog. And so what's going to happen? What do I think is going to happen this week? Well, we got earnings here on a week from Monday. I don't want to necessarily do anything then, but maybe I do, and we can talk about that a little bit later. But first let's talk about a trending stock in the form of Apple. I have this trend line here, and I'm going to activate it, and I'm going to drag it down here and show you how I came up with this trend line. This is last week's trend basically, and if last week's trend continues into this week, around Wednesday or Thursday, this says 113, we should be at 340 if the trend continues, or even if it wants to, like do a small pullback and then move back up. However it ends up there, there's a good probability that it's going to end up there. Of course it may come back down and retest this weaker resistance level here, or it may not. It may not be a good resistance level, and it may just continue its march upward. I'm going to imagine that it is going to continue its march upward with a word of caution. And the word of caution is down here in the form of this volume divergence. What this is saying is that volume seems to be dropping while price is rising. Well, it's not seems to be dropping, it is. And that's not necessarily a good thing. It means that there's a possibility that the bull run that this stock is in is going to fail. but the question is when, and just how much do the holidays play into this, because this is basically from Thanksgiving until New Year's, and volume seems to be picking up a little bit more now. So who knows, but all you can do is just play it as you see it. And the way that I would like to play this is that this stock is going to move to 340 sometime this week. So let's take a look at what we can do. But first, one more thing about drawings, or about charts on Thinkorswim. Let's go back and load up our regular style here, and we'll get back to where we were. Sometimes I trade from my desktop, which is where I am right now, and sometimes I trade from my laptop if I happen to not be here. Problem is, I wasn't getting these notes and lines and things that I was drawing on my chart when I move over to my laptop. So I asked Thinkorswim, I sent them an email and said, here's what I want to do, how can I do that? And within an hour, that's the beauty of Thinkorswim, within an hour they actually answered me, and they said, here's what you do. You go to drawings, and I didn't even know this. There's so much in this application, you just don't know. But you go to drawings, and you say save drawing set. And in this case, I'm going to give it a name, and this is AAPL. And you can see, if you look over here on the left, this is my A+ list, this is my watch list, and everything on my watch list is on some other list someplace, some sub list of my A+ list. And but I want, every time I draw on one of these on my A+ list, I save it as a drawing set. And when I say OK, it says, well, it already exists. Yes, I want to replace it. And that stores it on the server. So when I shut this down and I move over to my laptop, I have everything set up the same on my laptop, and it will bring that drawing information from my Apple chart onto it. If when I bring up Apple, I have to go say, of course, load drawing set of Apple, and it'll bring my notes back to me. It's a wonderful thing. Okay, so back to the real purpose of this particular video. Let's go ahead and take a look. Here we have the second Friday expiration in January for the weeklies. And you can see that weeklies fails every spell checker if you spell it like that, but that's the way I spell it. And I saved it as such in my spell checker. We can see that, well, I didn't want to do that. We can see that the stock's at 336, so a 330 put is out of the money, and a 340 put call is out of the money. I was thinking of something else, sorry. I'll get back, let me focus back in on this again. So if you're not familiar with a normal butterfly, let's take a look at what a normal butterfly would look like, and we'll do it on the put side. If you do it at the same strike, it doesn't matter much if you do it as a call or a put. We'll stick to the put side for right now, and let's buy a butterfly. And you can see what a butterfly is comprised of. It has one long option at 350, two shorts at 340, and one long at 330. So that means that this is a defined risk trade. You covered both your shorts, one above and one below. That's all. It's like a credit spread, sort of, or a debit spread, however you want to look at it. Let's go take a look at the risk profile. And if you think the stock's going to be at 340 on expiration Friday, this would be a really good trade, wouldn't it? I mean, you bet $410, and I include commissions on this, so you bet $410 on both sides of this, only $410 once, of course, that it's going to be at 340 at or near expiration, and you'll make 584. That's like a 1-to-1 risk-reward ratio, and that's pretty nice. But there is a lot of risk involved in it. Let's change this to the 14th, and you can see that the chance of it falling in this range is better, and this is kind of in the middle. It's almost a delta neutral trade. The 340 is almost in the middle. That's not bad at all. But what happens if it, because of earnings or whatever, and everybody's like piling in the Apple because they wanna take advantage of the pop a week from Monday, and it goes up to 350? Well, you guessed the direction right, but it moved too much, and now you're going to lose money, and maybe you don't want to do that. So that's where the unbalanced butterfly comes in. So let's erase this one, go back to simulated trades, and let's do a 340, and this time we will buy an unbalanced butterfly. Now, you know that these are popular enough that Thinkorswim actually put this on here as a menu selection, so you know that a lot of people do them. Otherwise it wouldn't be on their menu and you'd have to do like custom. So let's do the unbalanced butterfly, and the first thing that we see here, whoa, actually this particular one is like giving me a credit. Even though I'm buying it because it's green, it actually has a minus 0.23, or I'm going to collect $23 on this trade. Right off the bat, that's not too bad. What does the risk profile look like? Well, we can see that if it goes up to 340, we're risking $984, which is more than we were risking with the regular butterfly. But if it takes off on us, we're not going to lose any money. Actually, this $15.50 will about pay for our commissions. But you can do even better than this. If you think it's going to end up at 340 or higher, what you can do is you bump up your 330 put here. Instead of 2, you do 3, and that also increases your 340 short. And look what happens here. Okay, you put a little bit more money, you like doubled your money, doubled your risk, but you have a 1-to-1 reward here at 340, similar to what you would with your normal butterfly. But if it takes off on you and it goes up to 350, you're still going to have $440 in profit. If it goes up to 370, you still have the 440, which is really your credit down here of $450 or $4.51. So that is a pretty good deal. Now, the nice thing about the weeklies is the way that these are going to decay. Let me set that back to 1.9. And what I've noticed during the week is that as the days progress, even up to here we are on the 13th, even up to expiration day, everything remains the same. Say that the interest calculation and the implied volatility and everything else still remains the same, and you're not exactly at that 340, and it's a little bit above, say 342 or 343. You can see that you're still going to be able to cash this thing out for $800. Even if you're back on Wednesday and it's moving up, you're still talking 400 and some bucks. So a 1-to-1, you risked 451 or 1559. No, wait a minute, I'm sorry. You risk 1559 and you're going to get 30% return if it falls in around this range. Now what I've noticed, actually what actually happened to me last week was this particular at the moment risk line. Let me move this back down. I want to move this back to today. The white line actually bumped itself up around here last week, and when I saw that, I thought, well, you know, I'm getting out. You know, I had a what did I have last week? A 330, I think, and unbalanced put spread, and this white line actually had a nice hump. It came up, had a nice hump up here, and then it came down. So in this hump, this little sweet spot that was right in here was when I closed the trade, and that was on Tuesday. I opened it Monday morning and I closed it Tuesday afternoon, and it worked out very well. I was very happy with that particular trade. I know that some of you are saying, well, this doesn't look a lot different than a credit spread or a debit spread, say at 340. So if we were to do something like that, and we'll take a look at it. Let's uncheck this one. And we'll go back to a simulated trade and say that we want to do, we want to sell a vertical at 340. And we end up with kind of the similar picture. We risk less, actually 2/3 less, or $500 versus $1,500. And if it ends up at 340 or higher, you're at 425. But if it ends up at 340, you're at 425. Whereas with this particular unbalanced butterfly, if you end up at 340, you're at $1,400. So a 1-to-1 risk reward at 340 for both? Yes. Can you bump this up and take the same reward? Yes, you can. You can do that. This you can risk 1,700, and if it ends up at 340, you have 1,276. You can do that by doing 3 of these. Risk about the same amount and get about the same reward. So, you know, there's different ways that you can do these. I'm not saying that the unbalanced butterfly is the answer to everybody's wishes. You can't squeeze blood from a turnip. But this has been a pretty successful trade for me on a momentum stock. And if you don't want people to think that you're real crazy, at least you know you're spending a little bit more on your transaction costs for this particular one. This is it's going to cost $10 for this trade to open it, and of course it'll cost you $10 to close it. And this particular trade, it's going to cost you $7.50. So I pay $1.25 for each option. And if you don't have that rate from Thinkorswim, give them a call and ask them to do that for you, and they probably will. Tell them that you have a lot of friends and a lot of people that you know have that $1.25 rate, and that they trade about the same amount as you do. So ask them for that rate. So should we do 3 verticals, or should we do what I would call like 2 butterflies? Or it's actually not applicable, because you know you can fudge with any of these numbers that you want. So how many did you do? I did $1,559 worth. Basically, you could say, or if you want to sound really good, you could say, well, I collected $450 worth, because it's difficult to put a number on unless you say exactly how many of each strike that you got in at. Alright, I've babbled on long enough, I think. Just wanted to explain this particular trade and why I've been doing it and how it's been working out for me. Sometime I actually went back, I would say back to September or October, when I was testing this particular trade out, and you know, just reading the charts based on support and resistance and the current trend, and looking at volumes and the 20 simple moving average, and just looking at those things and deciding whether or not what kind of trade I wanted to do. And I always did them where I thought the price was going to be, or had a good chance to be, by say Wednesday or Thursday of that weekly expiration, and every one of them worked out. So on Apple, and I did it on Apple because, you know, Apple is Apple, you know. That's all I can say. There are other momentum stocks. Let's just take a quick look at Baidu, which I think is going to be heading out. This is a breakout here from this fairly solid resistance, and then acted as support, and then here it just fell right through that support, came back on it, and it broke out. And Baidu would be another one that I would be very interested in doing one on for this week. What would I do it at? Where's our price at? This is January 2s. So I would say I'm betting it's going to be around 110. So I'll do an unbalanced butterfly. It looks like I already have one here. Let me take that one off. Bring up my risk profile. Where do if it moves like this, where is it going to end up? Let me just zoom in here one more so I can get this weekly expiration in here. There's a good chance it could be up to 110. So here we are at 110. So I would risk 440 to make this 551 at 110, and if it keeps on going, I still get 58. And again, just bump up this this lower put here, this lower strike put one more, put 676 at risk, and if it just takes off on you, that's $324 above 115. So that's a pretty good trade also. Of course, you can lower this down to 105. I'll go to 105 and take a look at it. And you can see that now you're going to end up paying, but that's not all that much of a bad thing. But you have to bump this up a little bit more to be profitable. Up here, 236, you put 2200 at risk, and you've already passed your peak here. So that's why I'm saying if it's a momentum stock and you think you know where it's going to move to, you can do this particular play and you're protected even if it wants to go even higher. And we can just bump this up here like we were before. 676, 324, and we look over at the red down there, down here at this number when we're over here, and that's 805. So that's a better than 1-to-1 risk reward, which is not bad at all. So that's it for the Unbalanced Butterfly. Thanks for watching, and welcome your comments, suggestions. Thank you very much.